Hey everyone, it's Andrew. Welcome to Atomo, Wednesday, December 14th, 2022. Let's get into Federal Open Markets Committee Day. So what I'll do is I'll bring up, jumping around on Zero Hedge a bit, see how they summarize this. I'll pop this up. So we saw a raise today, 50 basis point increase, which no surprise. That's pretty much been priced in. And I like how there's the summary here of, you know, as I'm reading kind of economic information, it's almost like, oh, wow, we had a CPI print yesterday, and the CPI print, I think I came through at 7.3, which is definitely down from the 8% that were printing in the summertime. So, something's happening. It's like great. And then you hear from Normie News and Bubble Vision that, well, it's like great things are here again. Let's pivot and let's get back to getting close to the zero bound. uh, I'm sure there's a lot of people that would like to get the zero bound, but the unfortunate thing of going back down toward zero is your inflation is just going to go red hot, white hot even. And again, no financial advice here. This is just, subjective analysis based on what I'm seeing. I agree that there's still a lot of ways to go. We haven't punched that CPI down. Now, of course, the Fed wants to maintain a 2% inflation rate. I got a hunch that maybe you want to undershoot it a bit and depress things a bit. And I'll get into that. Let's take a look here. Needs substantially more evidence of lower inflation. Like you don't want to start pivoting, and next thing you know, you have a pop up that kind of undoes all the work and it reduces the Fed credibility. One of the things to know about Powell is jump back to here. He's so far he's said when he said, okay, there's going to be more rate hikes or increases, he's kept his promise. He hasn't waffled around like a Bernanke or a Yellen. He's in a different camp than those two turkeys. So I'm not here shilling for the Federal Reserve. It's kind of an enemy of your enemy is your friend in this case. The Federal Reserve looks like it intends to do work to think of it as you're going to a gym and you don't like leg day. Leg day sucks. So you do anything you can to kind of bulk yourself out of leg day. But if you have a trainer who is there that's really keeping you accountable, that trainer will get you to do leg day. And yes, it will be painful. You will feel the pain, but you'll get the gains that come with it. Nobody wants to lose their mobility. And you have to think about that with the US economy right now is Powell doesn't want to see the US economy lose its mobility. And what I mean by that is if you take the players in the world, if you take China, you take Russia, you take the EU, you take the United States, um, those are the primary economic players that are on the game board. Now, at this rate, what you might see is, well, Europe is really trying to kind of sink their ship so they can start to rebuild their ship. And so the theory here is the first to sink their ship and hopefully take some others down with them is the first to start rebuilding and refloating their new ship. So part of when we had some elections, I think around, so if you take a look around 2020, Canada had an election, the US had an election, and there were some, not necessarily memes, but there were some compilation videos rolling around where the politicians were like, we're going to build back better, we're going to build back better. And they put this all over the place. So we know that build back better is basically it's a program brought about by the World Economic Forum, also known as Davos. I'll call them Davos. So if I want to be kind of subjective here, think of the World Economic Forum as kind of a think tank, a place where people can go to meet with like-minded people, heads of state, economists, people who are running large organizations, because they want a place to go and they want to think with like-minded people and figure stuff out and help us and save the planet and do all this virtuous work. Now, what you're going to have is as you have centralization, you have these groups that want to centralize. In order to run perhaps a green economy, you need to make sure that everybody's on board and that nobody has a way to wiggle out and to do their own thing. So if the United States and Europe and the Five Eyes, Canada, UK, Australia, New Zealand, and the United States, the Five Eyes, are all together trying to build this new type of economy and to stick it to fossil fuels. Well, what's going to happen is, you might be thinking, oh, those people who do oil and fossil fuels making so much money on us, and there's a level of money that they're making, but also the benefit is having high density energy at very low prices available to you. And we have to even look at, looking at some authors who are saying, perhaps burning natural gas in a natural gas plant is better than people going out chopping down their forests and burning wood. And we've seen this. There's maps around, and there are authors and other journalists, usually not the normie news journalists, but the others saying, you know what, we've been greener than we've ever been on the planet. And then there's data to show that. So I'm going to put that aside. And why I brought that up is in order to run some of these very stringent policies, you have to press down on the people. Think of the Netherlands and the farming problem that they have, where I think there's 300% grab back on land or something like that. Just want to take out some of these farmers. And the Netherlands is one of the most efficient farming countries in the world. Now, the amount for such a small nation, the amount of output that they provide for farming is immense. Not necessarily, I don't know if they're the top in the world, but they're pretty close. They do a lot of exports. So you can just go look that up. And to take them and to target them and to start to blow up, put that in rabbit ears. I don't mean that literally, but what's happening is expropriating farms for whatever purpose. Say, oh, this is good for the climate. You want to have, like, farmers don't just go blowing around fertilizer for the sake of blowing around fertilizer. It costs money, so they want to use as little of it as possible to have the least amount of impact as possible. I watch some of the farmers on YouTube, and they talk about this. Like, yeah, we don't want to pay more money than we have to because they're already running close to the line on their finances as they can. So what we have is potentially, if the Federal Reserve is playing a game to, and meaning this like it's kind of serious here, is we want to get back to sound economic ways of doing things. You put in your labor, you do good work, it's valuable work, it provides something of value. You're not funding research on Shih Tzu dog farts between the years of 2020 and 2022 and the amount of greenhouse gases created with that. Some ridiculous stuff like that. I'm just kind of making that up. Sometimes some of the research that I read is not too far off. Like, come on, let's Manhattan Project fusion and try to get very high density source of power for a very low amount of money. That would be an amazing breakthrough to have. And that would have, it'd be nice to have a little microfusion reactor for everybody's house. That would be the greenest thing ever. Then we can change our tune about oil and fossil fuels and whatnot. So the Federal Reserve, to come back to topic here, let's pull up the hedge again, take a look at this. So the Federal Reserve, potentially looking at a program of keeping rates high, maybe even raising, again, this is subjective stuff, raising to 6 to 7% in order to bring a type of discipline back to the markets and back to government and back to people who are setting up businesses. So, and you're going to see what the gist of what's happening here in this article that the Tylers at Zero Hedge have compiled is, they're bringing up information that the market looks like it wants us in a pivot zone. It's kind of like jumping up and saying, come on, please pivot, pivot, pivot. We want to make money again. Yeah. And that's what would happen if there's a pivot. And the other element here is there's another article here, Powell on changing the 2% inflation target. So there's talk that the Federal Reserve keeps a level of employment and they keep an inflation target to around 2%. Now, there's talk here about what if we ratchet that up and run with like a 3% or a 4%. The thing you have, if you put your JPOW hat on, is you don't want this running away. Well, if it's going to run away, you have to make sure that other countries and other economies are running away hotter and worse than you are. So there's a bit of a game here that can be played. And if we were to pivot now, it's possible in the European project that they can turn around and do something like reverse Brexit, bring all the gold back together. The ECB doesn't have access to all the nation's gold. The way that the ECB works is the ECB is not one bank to rule them all. They have the member bank. So it's not a super tight fiscal union. There is a fiscal union there, but it's not at the point where all the banks are basically nationalized under a supra state being the ECB. Each of the countries in the European Union have some level of autonomy. But if we were to bring the UK back into the fold and the ECB were to ratchet up and by decree create a very tight political union to the point where you almost dissolve all of the sovereign parliaments of the ECB countries, that would probably, I don't know, some might, I could see the UK kind of cuckolding to that sort of thing. don't know what happened to the resolve of the UK people. I think after Lizzie passed away, that is basically the UK is like a lost zombie walking around now. Um, just hopefully that there's some willpower within the UK people to stand up and to not allow what's going to happen to kind of pull them back into Europe. Because next thing you know, it if the USA keeps on track, they're going to be getting more UK refugees, kind of like back in the 1800s into the early 20th century. People are just wanting to get away from it all. But if all of the countries bugger up really bad, then there's really no good place to go, and that's, I would believe, a part of what Powell is trying to do is to make sure that the United States stays as a place where people really want to be. And that's the miracle that we're looking to have happen here. So 2% inflation targets. I don't agree with zero hedge here. At some point, Fed will concede it has no control over supply. That's when we start getting leaks of a raising of the inflation target. Don't think under Powell's watch. I think he's going to get the job done. Given that inflation's at 7%, what we might have happen, they're going to, oh, what about the jobs? What about the jobs? What about the jobs? Well, there's enough room in, given that with appropriate cuts and a decent enough, and I'm setting up a bit of wishful thinking here, with a decent enough fiscal spending policies, you hope that some of these old farts that are in Parliament, or they're not Parliament, I'm Canadian, so I'll say Parliament, but in the USA, some of the 80-year-olds kind of just exit stage left, get out of there, get some people who really need the country working in a way that's going to serve the long-term needs of the country into the future. Get them in play and get them really tightening and thinking about setting up the stage so that it's not all punch, bowl, and pie. That there's actually effort needed to keep the United States as a great country, great place to be. Because if the United States goes down, there's really nothing left in the world. Any country that wants to punch up above, heaven forbid, it might turn into be Russia. Imagine that if the USA basically craps the bed, falls over, and then Russia becomes the dominant place, and people can have freedom of speech, and people like, what do you mean Russians have freedom of speech? Oh yeah, there's some things they can and cannot say, but for the most part, they're at the rate that the USA is going at. You know, might be a change, and I'm not shilling for Russia, but you know what? It's gonna have, some people are gonna have to take a few steps back and take a look and say, where am I going to be treated as a person the best? Um, yeah, so what we're potentially looking at is thinking a 6 to 7% Fed funds rate in 2023. Reading some Danielle DiMartino Booth, and she was saying something might break down in the leveraged loan market, and a lot of that is primarily in Europe. To look at some of a gentleman by the name of Tom Luongo's work. There's some of his insights. Look at with Daniel DiMartino, some of the things that Luongo's looking at is let me kind of phrase it here, collect the thoughts on this, is the European Union, really for them to get yield, they have to work on. I was looking at this before a long time ago. is, okay, if I want yield, if I want 10% yields, then my move back about 10 years ago was get into European bonds, the really high yield stuff. With the thought, well, hey, if I go in and move some of my mutuals into those bonds, again, no financial advice here, then if they're getting bailed out and bailed out and bailed out, I can't lose. It's a Fed put type situation. Goes for stocks. So stock prices go up as the Fed prints. Well, as the ECB saves their bonds, it's like, hey, I can throw some stuff into those very high risk mutuals and lap up some nice yields. And when it starts to change around, I can pivot out of that. So in order to have yield, you have to have high risky assets in play. And if we pull the euro dollar out, euro dollar being US dollars that are in the offshore markets, and if those get pulled out of play, then what happens is these leveraged loan setups start to unravel, and they unravel quite quickly. You saw that in the British gilts or the pension market, just shortly after Queen Lizzie passed away and Boris Johnson was kicked out and Liz Truss went in, and there was kind of a blowout. And tried to make some changes and it started to blow stuff up, and realized that you got a pretty highly levered market there. And we saw some with Credit Suisse as well getting blown up a bit, but they looks like they're on the right side of the game board, and they got some assistance with that. So the thoughts here are, in conclusion, that I'm on the team of going to 6 to 7%, unless something significantly breaks before that. Potentially in the U.S. Senate, we might get another person walk over to the other side and say, if you want to keep the country together and if you don't want to have nastiness and tyranny going forward, we need to start looking at how to put together game plans that are going to ensure that the United States stays intact going forward. And if the United States stays intact, well, Canada's playing along to some extent right now. I think we'll have to have an election with a government change. There's been some murmurs that that may happen in the spring of 2023. See if either kick the beans of Trudeau out and bring in a different group, or heaven forbid, if he stays in, well then, that would be just head-shakingly amazing. So let's see what happens. Be well. Human spirit always gets us through this. Have a good one.